Now we are joined by the management of Raymond. We have Mr. Amit Agarwal, who is the Group CFO of Raymond, joining us on the show. A very good morning to you, Mr. Agarwal. Thank you so much for joining us on ET Now. Let me directly dive into your earnings. Healthy sales, you witnessed healthy sales across all the channels in the quarter gone by, and I believe this is driven by strong wedding season demand. If you could shed some light on how was the demand trend in the month of July for the company?
So actually, first of all, we must tell you that the first quarter of this fiscal, we have seen a very strong revenue growth across all our businesses. And if we talk mainly about the lifestyle business, the domestic demand has been very, very good. And we have been able to capitalize on that as we could dispatch the products which people needed. Now, the way this quarter, second quarter looks like, the July and August is obviously seasonally weaker quarter, seasonally weaker month. But post 15th of August or the late August onwards, you see from a primary sales point of view, we start stocking it with our dealer network, distributor network, who prepare themselves extremely well for the bullish demand and the robust demand which we are expecting during the festive season as well as the wedding. And as we gather the momentum from our network, we have seen people coming forward and making a very, very strong booking of our fabrics as well as apparel, because the entire trade is expecting very good outcome during the festival and the wedding season in the next 4-5 months.
Okay, I take that point, Amit, but I'm just trying to understand. A lot of businesses are talking about the impact of inflation on demand. Is there evidence, according to you, that people are settling for less, that are holding back from making certain purchases given the rise in inflation?
No, actually, what is happening is it is slightly different, because when we are seeing the product booking, which is a very good sign that reflects how the behavior of the customer would be, we have seen actually our polywool and wool segment have contributed more in terms of the bookings for the second quarter and the third quarter dispatches vis-a-vis in the past pre-pandemic level. So people want to go and look forward for better quality products, higher price point products, and we have seen the selling prices in terms of our product bookings have gone up, especially. And if you look at the consumers, I believe very strongly that the consumers are two types of consumers who are, one is a need consumer who is busy managing his food and decent living, just about making it. And the other is a want consumer who believes in spending on the discretionary. And we actually we cater to the consumers who are more into the discretionary spending. And there we have absolutely not seen, because the income levels of such people have been rising. They have not been able to spend money over the last 2 years on the pandemic. So the way, if you see the whole hospitality and everywhere people want to go out on celebrations, this time actually when we hear our trade network, our TRS network, they are talking about that they expect very, very good festival demand going to come, because people would like to go out and celebrate with their families and friends in terms of the Diwali, Dussehra, and wedding obviously is going to be more grand. We know that the wedding numbers in the first quarter was as high as 40 lakhs, and people expect that again around the October, November period, December period, weddings will be once again very, very strong.
Mr. Agarwal, let's talk about the margins. In quarter one, your margins stood at around 13.4% when compared to last year's around about 0.8%. Sharp uptick that we are seeing in the margin figure. Apart from the low base, what has actually led to this expansion? Also, could you tell us what's the outlook for the margins that the company is eyeing?
Yeah, no, absolutely. I think, our deep focus on the cost rationalization, I think, has been very, very helpful in terms of taking the margins up. And if you see, even from a pre-COVID level on an EBITDA basis, which used to be sub 10%, we have taken to 13.5%, which clearly reflects that almost 360, 370 basis point improvement cannot come just from the sake of a product, but rather it is a lot to do with the cost structure. So in spite of the inflationary pressures which we have seen over the last 2 years in terms of the manpower cost, freight costs have gone crazy, have increased really very high, and other logistics. So everything put together, still, in spite of having a 19% revenue growth, our OPEX cost has exactly remained at the same level of pre-COVID levels. So whatever we did well, that has helped us to contain the inflation which has come across in the last 2 years in the OPEX cost. And so therefore we feel that the margin improvement is driven not only just the cost management, but as I mentioned, also about the product mix. Secondly, if I look at our reality business, I think which is doing exceedingly well, has contributed well for the quarter also, and demonstrated very strong margins during the quarter. So between the lifestyle, engineering, and real estate, I think every business have shown an improvement in the margin.
Okay, I want to talk also about export sales and the demand from countries like the US and Europe. Any new customer acquisitions post the China Plus One strategy?
No, actually, I think that is very helpful. As you see, that even the government is very focused on increasing the textile export, and with the China Plus One, and we are actually there to capitalize on it. And the way I'm looking at it, that we have seen a good growth, more than 20% of the growth from a pre-pandemic levels on the export side. And we have actually added quite a few customers. And in a B2B business, because this is primarily a B2B business, we have added almost 8 to 10 customers during the last 6 months, and they have started to increase the volume. And if you look at it from a volume perspective, at least we have added almost 750,000 to.
Right, Mr. Agarwal, let me slip in a question on your realty space. Could you tell us how's the demand that you're seeing in the realty space? Also, how has the booking been for the company in the quarter gone by?
Yeah, no, actually we are very pleased. And if you see, as we talked about, we made 157 bookings during the first quarter, and taking up to 2,066, which is almost 80% of the total inventory launched has been sold. Now, the second project, if we talk about the Address by GS, which we took out, only launched last year, November. And there, again, in this quarter, we made 100 bookings, 102 bookings out of a total of 570 odd apartments. So that shows that the total more than 280 apartments have been booked, more than 50% has been booked. So that has given us a lot of strength. And you must have read about that we have recently signed a joint development agreement for a large premium residential project, which could deliver a revenue to the tune of 2,000 crores in the Bandra. I think we are seeing very good opportunity when the strong team has been built up. We are very focused as a company because we come from a manufacturing mindset that there is a lot of opportunity, a lot to be built, and our motto being Building India 1, 2, 3 plays out extremely well. That you want to work on to build into 1 BHK, 2 BHK, 3 BHK. And I think what is also important is to understand when anything comes out of House of Raymond, this is a trust which is there. So I think, the common need for a man is a roti kapda makan. And we have been doing successfully almost 97 years into the kapda. And now we have launched into the makan, again, for the large, affordable community of India. So very strongly we believe, and we are aligned to the growth of the India.
All right. Thank you so much, Amit, for joining in.